Let's talk about Apple because this stock just continues to amaze us here. We all know about the tariffs and the delayed AI rollout that Apple had, but I was definitely concerned by a couple of announcements that, well, they would have large impacts on Apple's service revenue, and these are major ones.
Yeah, I mean, they're huge. And the thing you look at the service business is that has been kind of the crown jewel, so to speak, of Apple, where it's like, well, they're not just iPhone anymore, even though iPhone, I think, still accounts for about half their sales.
I think so.
They're not just iPad. They have this service revenue, which is growing tremendously. It's reoccurring revenue. It's great. But a big problem was actually in the most recent quarter, they didn't miss expectations, and the service revenue grew at just 11.6% compared to last year. And I say just, I mean, that's a decent growth rate, but, we'll kind of get to the valuations on Apple. I would be expecting more growth from that business if you're going to justify a higher multiple.
And people might think, oh, they hate Apple and so forth. No, I just bought an Apple Watch. We love the company. We just are concerned for investors it's overpriced, which brings me to the next big concern we have that I don't think a lot of people know this, but Alphabet has an estimated payment of around $20 billion annually to be the default search engine. I mean, and that's a lot of money. There is concern if this were to hold up in the court ruling that they're going through. Apple's in court right now. It's monopoly. And
not Alphabet in court right now.
Well, actually, Apple is too.
Yeah, they're in the court too, yeah.
But we are talking about Alphabet in the court about being a monopoly. And this is a big problem because also this week, Apple executive Eddie Q added additional concerns. I can't believe he came out and said this, but I guess he's talking the truth. He stated the searches in Apple Safari browser fell for the first time in April, something that has never happened in 20 years. That's huge. He then added that the iPhone maker, kind of looking at adding AI search options to the Safari browser. So competition there. Alphabet, that's the problem. Alphabet, Apple. I wish it was close. Google. Google would be so much easier. But just like saying, yeah, you know what? Maybe we're not going to pay you $20 billion.
Well, and the big thing on that $20 billion is that almost flows directly through to the bottom line.
Yeah.
I mean, I can't imagine there's many, if any, costs associated with that. So not only, let's say they lose that $20 billion in revenue, that'd be a direct loss, essentially, of $20 billion in profit, which would hurt. The other thing you look at here as well with this payment, as you said, I mean, if you're like, you can still be the default search browser, but we're also going to give people the option of maybe pulling in ChatGPT. They talked a lot about Perplexity as well. Eddie Q did. They seem to like Perplexity quite a bit. Why would I pay you $20 billion if people aren't going to be using my search engine because they're going to click on ChatGPT instead? That makes no sense. I mean, that is a huge risk to $20 billion in my viewpoint.
And I don't know what the free cash flow is for Apple, but I would say this is a big part of it, $20 billion. And I don't know if they pay it monthly, yearly, quarterly, how they pay it, but it's still, as you said, there's really no expenses to it. It's just free cash flow coming in.
Yep.
And if they were to lose half of that, I think that'd be a big loss.
Yeah, and I mean, maybe there'd be other people that would be willing to pay for that, but if it's not the exclusivity of having that default search, I don't think it's nearly as valuable.
Yeah.
I mean, there's some big question marks that they'll have to answer there. And that $20 billion is supposedly tied into that service revenue. So you could see that service revenue shrink quite quickly. The other thing, too, that we look at is that there was actually a recent ruling, and I was surprised this didn't get much attention, it appeared, but a judge ordered Apple to immediately stop imposing commissions on purchases made for iPhone apps through web links and cited apps. This has enabled developers like Amazon and Spotify to update their apps to avoid Apple's commissions and direct customers to their own website for payments. This commission rate was around 27% for Apple, and it could cost them billions of dollars annually. I don't know where people just didn't want to talk about this, that's huge to me. That this service side, again, almost another thing where I don't think they're doing very much, but they're charging this 27% commission. Yeah. And if you actually look at commission rates just on the App Store, I guess it ranges between 15 and 30% generally. But they initially allowed for like web links. So if a company wanted to go in, like let's use Amazon's Kindle, for example, and they wanted to say, well, you can buy the book, just click the link here and go to Amazon to purchase it. Well, that's where that 27% commission would be charged. Well, now you don't get that 27% commission.
And what we're trying to do here is that because people do this as investors all the time. You buy something, it's Apple, it's going to come back. Oh, everybody's got an Apple. Oh, it's a great company. but there's things that are developing underneath or behind the curtain, so to speak, that could cause problems down the road. And also in the stock, again, I've been on there, I think you've been on there saying this stock could drop easily 30, 40% because there's just no reason for it. People say, oh, well, that would never happen. That's Apple. But again, when you look at it right now, it trades at 25 times 2026 earnings. And even though revenue is only estimated to grow in the low mid-single digits. I mean, this is not a great growth company. I mean, I think some of these energy companies have higher growth than Apple does with lower PEs, and you're paying a lot less for them. So Apple, again, great company. Tim Cook, great CEO. Love their products. But this has been pushed too high. Not too fast. It's been kind of developing. I know we've talked about this before. I think there was 2012 a big drop on the stock. So we're warning you, if you have Apple, just kind of hear what we're saying, because if it does drop 30, 40%, I don't know what Apple can do, Tim Cook can do to change this. You're going to say, whoa, what happened? Oh, shoot, that was on the Smart Investing Show back in May. I should have listened.
Well, I know we take flack from people saying, well, you said Apple was expensive a few years ago, and it was.
It was.
It just got more expensive. It's the only problem. And that's the issue with having a strategy and sticking to a discipline. Is you're wrong sometimes.
Yeah.
But I tell people I'd always rather be wrong for the right reasons than right for the wrong reasons, because that then could lead you to make big mistakes by kind of being like, oh, well, it's Apple, it'll never fall. Again, we talk about how GE had that same perception years ago, and people are like, I saw that coming. No, you didn't. No. And I guarantee you 5 years from now, if Apple does fall, people will be like, I knew that was going to happen. Well, then why didn't you sell your Apple stock? Right. So I just, again, I think it is one of the stocks that amazes me for the wrong reasons.
For the wrong reasons. And it's one that actually we look at. And again, we talk about buying and investing in businesses for the right price. And again, Apple, great company. It's just too pricey. And it's just, we continue, when we find things, we'll share them with you. If you want to act on it, that's great. If not, well, we did our best. Yeah. So